Good afternoon or good morning, depending on where you are in the world. And I'd like to welcome you to the second in a series of 4 webinars from Wealthics Global Partners. These alternative investment webinars will each feature a presentation from one fund and one fund from the Wealthics suite. Before I introduce the first presentation, I'll inform you that the webinar is being recorded and you can have a copy of the recording on request. Please note that on the webinar, no commission terms will be discussed. And if you haven't already got terms of business with either of the products being presented, please drop myself or the info@wealthics.com an email and we'll get the terms of business arranged for you. Finally, please remember to submit any questions that you have for the product, the fund and the bond, on the tab below where you'll see a questions tab. Please submit the questions there. And if English is not your first language and you'd like to submit the questions in Spanish, particularly for our Latin audience, then please do so, and Manuel will be able to ask those questions to the audience in English. Okay, so that will just present now to you the first of the 2 products being presented, which is Glenn Scott Ellis, who is going to talk to us about Link Lease Finance Bond.
Thank you very much, Kevin. Thank you, Manuel, for organising this. Let me just share screen. Okay, guys. Good morning, good afternoon, wherever you are in the world. I'm sure 1 or 2 of you are already aware of the name Link Lease and the bonds that we have on the market, but I'd just like to sort of take 15-20 minutes of your time just to run through some of the key points. And again, guys, thanks for the opportunity. So I'll go straight into this. So Link Lease is a Link Lease Finance PLC. It's based in the UAE, in Dubai. Which is, as probably aware, is quite a huge market, and certainly for the asset financing business that we operate in. So we have 2 bonds that focus on that asset financing marketplace, and one of those is an existing bond that's been running for the last 2 years, which is the US dollar. That's a 50 million raise, and there is currently about 22 million in there. Obviously, this year has been quite slow compared to many others with the pandemic, unfortunately, which I'm sure some of you guys will have seen as well. And I think about 4.5 months ago, we brought out the GBP sterling version as well, which is a smaller raise, and that one has about 3.5 million in it now. So I'll go through the differences a little further down the line, but they're both what we would class as a truly asset-backed opportunity. So as far as we're concerned, having known the market for many, many years, we believe that we are one of the most exciting and genuine opportunities in the marketplace. Coupons are 9% per annum, and the only difference there is that the US dollar is quarterly, and the GBP is biannually, so it's every 6 months. It's a senior secured bond, so you guys as bondholders or your clients as bondholders have the first charge, and I'll go into more detail on that in a while. But so yeah, 2 5-year term bonds. The first one is 2 years into that, so just 3 years left of the US dollar bond. I think that in itself should sort of ring like you know, real good opportunity time for that, because it's a proven model. It's paid 6 coupons so far, with the 7th due on the 19th of December. And the way our structure works within the bond is that the money for the coupons is held in reserve anyway, so there's never any issue of paying coupons on time every time. So we can send you all information on that after the event, proving the coupons are paid on time. Our GBP, the first coupon is about 6 weeks away. Again, on time, no problem whatsoever. Just a quick one. I'd probably normally do this at the end, but just to highlight, you know, we are an existing bond that have been out there for quite some time now. So we're already available through the likes of Hansard for the US dollar, and then, you know, mainly the platforms now. As you're all aware, the life companies kind of de-risk the whole business model, so it's more difficult to go through the life companies now. So we're on Gravitas, Capital International, Isle of Man, TIP in Mauritius, Custodian Life, Exante. We also have our own white labeled platform account as well, which is the Investment Hub. It's just another option. And obviously direct subscription is something we can access as well. But you have to meet the 125 K dollars minimum for that. Just this, 1 second. Okay, sorry about that. So, okay, so yeah, 9% senior secured bonds. What I've done through the presentation, I've highlighted some of the key points in yellow. So I don't need to run through every specific word, but you know, it's there to draw your attention to the benefits of the actual bond. You know, we're essentially offering people the opportunity to benefit from a real successful market, very specific market in the Middle East, but the senior management team of the bond have 17 plus years of experience in this marketplace. So they are very well placed to run this kind of exercise. And what they've done a couple of years back is decided to open that up to you guys to have somewhere for your clients to have a real genuine asset-backed structure that you can quite easily access. So it's a low risk, high yield, asset-backed investment with visible and stable income streams. And I can follow up with lots more information on this to Kevin and the guys after, should you require that. So I don't expect to answer everything on this particular presentation, but I can certainly follow up with anything that you guys need. So a little bit about the bonds. The security in the bonds is, the way these things are structured is it's a standalone bankruptcy remote structure. So actually all of the bondholders are governed by the rules of the bond and the individual third parties that protect that bond. Again, I can follow up with more structure, but what it essentially means is that Linklease as a standalone business cannot access cash from the bond. The bond is there purely to buy equipment to lease out and return, you know, A, the coupon to the clients, and B, the principal at the end of the maturity. So very well protected. It's quite an expensive structure to put in place, but it's one that we felt was absolutely essential in this current marketplace. I think most guys would agree. Everybody's looking for security. Nobody wants any more risks. I think we've kind of seen enough risk over the last year or so. Again, you know, they're looking for potentially shorter terms to invest money, which obviously the 3-year left on the US dollar is attractive. And they're looking for a good track record. And I think there's no fairer track record than 6 coupons being paid on time with the 7th already there, ready to go. So that's all strong points in our opinion. The terms of the bond. So, you know, another major factor is that both of the bonds are dual listed on Frankfurt and Cayman. And effectively through the structures of the platforms, it's a real low entry point, you know, right down to potentially $1,000, 1,000 GBP. Not that we have such low amounts going in usually, but at least it's available to invest from a lower entry point if you need to. Again, 9% per annum, you know, fairly solid yield. It's not the biggest yield on the market, but actually this is the business we're running here. So we need to make sure that the yield stacks up with making sure the bondholders are protected within that structure. So the key for us here as an experienced management team, if you like, is to make sure that we return the principal on time, the coupons are paid on time, and that you guys have a good experience actually, because this is a 500 million series we've put together. So this is the first couple of bonds within a very long-term structure of what we see probably 7 years from now that will close out. So our idea is to take you guys on now and look after you right through that process, so that when you have a good experience and the bond matures, we have another option for you to look at then as well. And generally, if people have had that good experience, they're more inclined to look at backing another bond from Linklease. So that's the idea. You can invest through the normal channels, all the clearing houses, Crest, Euroclear, etc. So as I mentioned, UAE-based company. It's probably one of the most stringent and controlled markets in the world. And what I mean by that is that the government actually help businesses here with the type of structure we have, because most of you will have heard you don't really miss payments and things in the UAE. It's not really the done thing, because it can lead to jail time very quickly. It can lead to default and business being closed down, etc. So because our business, we lease critical equipment to businesses, which are a key part of their business model, we are probably one of the last people that would look to be defaulted against. They would rather not pay someone else first than not be able to have this equipment. It's a key part of their business. So that puts us in a really good position, and it's been proven this year that we haven't had any defaults whatsoever this year through the entire pandemic, which, if we're honest, we were surprised about. We expected maybe one or two to ask us for some breathing space. I think one person probably missed one payment in the end, which they made us aware of. So ultimately, my point is, if the client stopped paying, obviously that has a knock-on effect potentially of the bond. It would actually mean lots and lots of the clients would have to stop paying for it to actually affect the bond in any way. And I think this year has probably been one of the toughest years we'll see for a while, and we're fairly confident that we've got through that now unscathed, to take us forward for next year. So we're in a very healthy position as a business. I'm not going to read all this, guys, but it just talks about, I can send a copy of this as well if need be, but what that kind of says is lots of experience in this market, and myself 20 years in the financial services market, but I actually work within Link Lease now. So I'm solely raising cash for Link Lease, and it's related businesses. So I'm fairly passionate about the business. I haven't got 50 different things to show you. I've got our business and our asset-backed bonds. So excuse me. So the leasing market, another good part about this for us is that it's fairly undeveloped still. Like the UK market, for example, is very developed in the leasing world. This one is very underdeveloped. So we have lots and lots of forward motion with this. Hence the reason for the 500 million series that we've put together. So if you Google this, if you look at independent forecasts, etc., there are something like 70 billion of quoted projects in this region alone, and most of that is actually in Dubai, where we are based. Our business is based in Dubai. Our offices are in Business Bay, so we're sat right in the heart of where all that business is. Again, this year has been slightly different because things like the Expo has been put back 1 year, but actually, that it still needs to be built out. So all these different things that hang off a major event like that, we will be quoting on. We are involved in that. We have about 35 million in pipeline leases at the moment, which, to be fair, in all honesty, we can't get the money in quick enough to fulfill those. So we have to pick and choose very carefully the best businesses to deal with, the ones that are more creditworthy, and the due diligence is very strong. So we're hoping that next year the cash flows, the inflows start to build much more, and we don't carry on with the pandemic another year. That would be great news. So large credit gap. It just essentially means in this region there are lots of what you would class as major banking institutions, but actually behind the HSBC badge or Emirates MBD, it's a very different world. And you go in there, they don't really understand asset-backed lending, if you like. So it's very different from lending someone money for a house, for example, where you can take a charge against that property. This is more structured. They need to understand depreciation of assets, timescales, secondary markets to sell those assets. There's a lot more goes into the whole due diligence at the start, and that's where the guys in the business have that capability to be number one on people's lists when they're looking for leasing. So we're in a very, very strong position. Just a little bit more about the due diligence. The guys are from a commercial background as far as the banking world goes. So they've taken all that, all those facilities and that methodology, and they've put that into Link Lease. And Link Lease was born just over 6 years ago. It's going into its 7th year, actually. So they almost take this commercial banking approach to lending. So not everybody gets lease. You know, lots of people come knocking for lending, but they don't all get that lease. They've got to be squeaky clean, good, strong clients to ensure that we don't have defaults, which would ultimately affect the bond. So what we look for from the lessee themselves, the person borrowing the money, strong operating track record, very comfortable debt ratio burden, diversified revenue base, so they're not just one-trick ponies, solid cash flows, you know, an incredible management team. As far as the assets that we will consider lending against, it has to be a very good secondary market. We have to think almost 3 to 5 years in front of where the lease starts. So we already know where that piece of equipment will probably go at the end of it. So, you know, we have to be able to source maintenance. Every piece of equipment has to be maintained by the main player. You know, so if it's Aston Martin, it has to go to Aston Martin for its servicing, etc. And that is part of the criteria, which also maintains the value of the vehicle or the asset at the time. Portfolios that we focus on are all very defensive sectors. Healthcare is for obvious reasons, is a very good one at the moment. Logistics, lots of online ordering going on, and that will go on for quite some time now. So lots of trucks up and down Sheikh Zayed Road here, taking equipment and things around, and strong residual values and you know, that kind of thing. So it's all part of the makeup that we do in the background before we accept anybody. And there we go. So logistics, printing is quite a strong one for us as well. Healthcare is big because the whole of the UAE is private healthcare. So if a medical clinic or a hospital wants to lease X-ray machines, they know for a fact that all those X-ray machines will be used over and over and over again. They won't be sat there waiting for somebody to come for an X-ray. It's all an invoice process because everybody has to have private medical here. So, but using $1 million of their own cash flow is not as smart as giving Linklease $30,000 a month, you know, and they get to keep, you know, up-to-date equipment, the latest technology that is fully serviced and operational 24/7. Energy as well is quite a big one out here. They're all looking for green solutions, if you like. So that's something we see that will pick up further into the future. So not many slides left, guys, by the way, so a couple more minutes. I hope you're still with me. But just how the bond works, very, very simple. It's a bankruptcy remote structure. The proceeds from the bonds are used to acquire and lease assets to very well chosen, carefully chosen clientele. All of the proceeds that we bring into the bond are designated to a pool of leases. They are ring fenced then within that bond structure and protected by security trustees who hang around that structure. Linklease then acts as a lease originator and servicer. That's where we charge a small amount to originate those leases on behalf of the bond. So they're paying a small amount for the expertise. And then the bondholders are paid their coupon, which is obviously quarterly for the US dollar and semi-annually, and then obviously the principal back at maturity. So performance has been amazing, to be honest. No defaults, no write-offs, and no delinquencies. We couldn't ask any more than that. It kind of says everything about the management structure in place. They choose very carefully who they do their leases with. So, you know, hats off to those guys. But so a little bit about the security. The important aspect for this is that your clients, your bondholders, should you decide to move forward, have first charge over the cash and the assets that are in the bond structure. That is a key one for you. And the security outside of that is Abu Dhabi Commercial Bank, which is a huge name, and Woodside in the UK, where the bond was issued. So two levels of security there as well. Again, I'm not going to go into everything there. It's just backing up that whole structure of how the bondholders would be protected. And this is very hypothetical, by the way, because we don't anticipate for one moment that there'll be any issues with the bond. But if there is a clear roadmap for guys to get their cash back, because we are truly asset backed. We're not prospecting for gold or hoping to dig something out of the ground or whatever. We are going back and collecting assets into the bond at that point. But again, very unlikely that it would happen. A couple of key features that are also quite important for clients. The main one I would say there is the coupon reserve. Overall, we have about 5% that is retained in the bond in the form of what you would class as liquidity. Now, that liquidity is not aimed at people redeeming early, because we would class this as an absolute buy and hold bond. But it is there for coupon reserve. So we have 1.5 times the coupon that's anticipated coming up the next quarter held back in reserve. So there's never an issue with coupons not being paid. And there's also a liquidity reserve of 1%, which is for unforeseen circumstances. We have used that for death situations, etc. But we've had very, very little in the way of redemption requests, I'll be honest with you. So all good there as well. So that's it from me. I'm probably slightly overrun, but I'll let Kev jump straight back in if we can, and then if there are any questions, feel free. But thanks for your time, guys.
Excellent, Glenn.
No problem.
I don't see there's any questions come through at the moment, but I just have a couple to point out. You ran through some which I was going to ask, and you covered them, i.e. at what timeframes the coupons were paid. I ran through the typical sectors that you lend to, which is good to see a very diverse selection there within that as well. One thing that probably within the literature that I didn't see, and I don't think was mentioned, is how much has been raised to date and what is the maximum raise within the bonds?
Yeah, okay. So US dollar first is 21, it's just over 21.5 million at the moment, which is, I would say, is probably, we anticipate we probably raise for one more year maximum, 12 more months from now, Kev. So I would say at the end of November next year, absolute maximum, we will look at closing that off. We fully anticipate to fill the 50 million at that point. And the reason I'll say that is, and something really key to share with you guys briefly, is that we're at that stage now where we have people coming to look at us, like hedge funds and discretionary fund managers, which tend to sort of input bigger numbers. So I would say to you guys, this is a great opportunity to access something that's getting very near to maturity, that is a short-term thing still, because I think probably 6 to 9 months from now, we'll probably have to close that off and bring out another one. The GBP one, that only started for just over 4 months ago. That's got about 3.5 million GBP in, but lots and lots of interest as well. I think this last quarter is going to prove to be a real probably better than the rest of the year, actually, because people are clambering now. I think we touched on this earlier, actually, Kev, but people are clambering to get those investments placed before year end. So that's where we are at the moment, but I'll keep you updated on the figures as and when they come in every other month. Definitely.
Okay, and well, one question with regards, do you have, and a bit more difficult to answer maybe, but do you have a kind of rough breakdown as to the capital raised? How much of that has come from sort of an institutional play, and how much has come from, I won't say the retail market, but I'll say sort of the IFA market, maybe via the life companies or via fund platforms. So that business tends to be multiples of smaller tranches and smaller investment amounts, whereas institutional money, your more sticky money, tends to be the larger sums that come in. So do you have kind of a percentage breakdown of what is IFA stroke retail, if you like, and what is institutional?
I would say it's about 95%. I'll drill down into those numbers and follow up actually with an email, but I'll tell you now, it's about 95% what you would class as just Mr. and Mrs. Smith underneath a broker that has 100,000, 50,000, 200,000. I think what people are realizing now, Kev, is that it's, fixed income returns, fixed income bonds by good companies are a very valid part of the portfolio now. So we're seeing lots more money coming in, but bigger versions of those numbers are almost creeping up to institutional-less type figures. So I think it's very heavily weighed on that market at the moment. anticipate that will probably flip by the end of it. So November next year, I'd probably say it'll finish 50-50, if I'm honest. That's the way we see it going.
Perfect. And just to confirm the question about getting the presentation forwarded on, so all of the attendees, we will ensure we'll send you all, I personally will send you all a copy of the presentation, both presentations, either later today or early tomorrow. Okay. One final question, as Justine's popped in, are there any plans for new bonds?
Yes, there are. Great question, actually, and it's reminding me I've forgotten that bit. We're looking at a Euro bond shortly. Now, I don't know how attractive that will be for the guys that are on the call, but that's a potential. So that's probably going to be Q2 next year. The way we intend to work this is as soon as we see the appetite that we think is coming from the various parties we are sat with at the moment, we'll look to release another US dollar bond then. The GBP one again, as soon as it gets past the golden number, sort of 10+ million, we know that we're not far from closeout at that point, and we will look to release. And that's what I mean by keeping you guys hopefully happy enough all the way through to want to look to invest again with us. So it's a long-term strategy for us, not a quick fix, one bond, see you later. It's got to be a long-term strategy. So yeah, great question. Thanks for that. And yeah, more bonds to come.
Excellent. Well, thank you very much for your time, Glenn. I think that's covered that. So we've ran halfway through. So excellent. Thank you very much for your time and your presentation.
No problem. Cheers, guys. All the best.
No problem. Thank you. Now I'd like to pass over to Nicholas Coelho from Participant Capital, who will talk about the Participant Capital Fund.
Hi, Kevin. Hi, Manuel. Thank you for the invitation. Thank you for the introduction. And thank you, everyone, for joining us. I really hope that you and your families are well despite everything that is happening, because definitely that's the most important part right now with all the conditions and the pandemic we have this year. Definitely a different year than everyone would have expected. But well, I know we have short time, so to jump right into what Participant Capital is, our Participant Capital Fund works like a private equity to allow investors to invest in real estate projects in the US. Participant Capital is the financial arm of one of the most recognized and largest development companies in the southeast of the United States that is called Royal Palm Company. And Royal Palm created Participant Capital in 2011 to allow private investors to invest in those projects. That, let's say, from 2011 to 2017, only what we call here friends and family could actually invest in Participant Capital. However, due to the large demand that people wanted to come into Participant Capital, we decided to expand it in 2011 to a public different fund to allow investors from all around the world to invest in the projects that Royal Palm Company has. As of today, Participant Capital we have a Reg D fund for US investors. We have two Reg S for international investors. One is registered in Cayman Island. The other one is registered in Luxembourg, and we also have registered the fund in different jurisdictions. We have our fund registered in Switzerland. It is registered in the UAE. It is registered in Singapore. We last week launched our feeder fund in Peru. That is a really great opportunity for people who have investors and clients in Colombia, in Bolivia, Ecuador, and Peru, because instead of paying 30% in taxes for international income, you will only pay 5% in taxes for all the returns that you receive from the investment, because you are investing through a feeder fund in Peru. And we also launched a month ago our feeder fund in Brazil, which is administered by BTG Pactual, one of the largest banks in the world, and probably one of the top 3 in Brazil. Is an administrator of that fund in Brazil with a similar opportunity. But Participant Capital, as I mentioned, is the financial arm or the subsidiary company of Royal Palm Company, which is a company that has more than 40 years of experience developing in the US, with almost 60 projects already finished with a value of $3.5 billion. Is the experience that Royal Palm Company brings to the table. And this is the company that people will be investing in. Investors are going to be investing alongside this company that is one of the most recognized in the world. and in the US with all the experience that brings with it. That said, what we are saying in participant capital is, look, you're gonna come to invest in a train that is already moving fast. It's not a train that is just a study. It's not a train that you're just putting the call in. It's a train that is already moving fast, that has all the connections and all the experience to develop the type of projects that we do. We mainly focus on residential and hospitality, but we also have a lot of experience working in urban development, urban planning development that are transforming cities. For example, right now we have in Miami the second largest urban development in the country. The largest one right now is Hudson Yards in New York. The Miami World Center is in downtown Miami. We have 28 acres of land that we're going to be developing with two other partners that have different type of projects. We have here hospitality, offices, residential for rent. For example, our Paramount, the last project that we did, is a 60-story building that is in downtown Miami. That is the main building of the entire project. And all these buildings are connected with a pedestrian road that is like about 6 blocks long, that has, it's like an open mall with stores, restaurants, bars, cafes that will connect each one of these buildings. This project is gonna be done probably by 2025, 100% finished, and it has a valuation of $5.2 billion, only this project. This shows you the type of company that we are. This shows you the type of investment that we do. And that's why we attract, and we've been working together with many institutional partners around the world. You see, I'm sure you see many names that you recognize from these type of companies that work with us, either as partners or as lenders that work and invest in our projects. In here, well, everyone knows Wells Fargo, Bank of America, Goldman Sachs, Credit Suisse, Deutsche Bank. I'm sure if there are, we have some Mexicans here, they know Inbursa, for example, is the financial institution that Carlos Slims own, one of the 5 richest men in the world. We have companies in the US like REITs in the US. ACOM, for example, is the largest development company in the world. They have projects all around the world and they invest with us. So as you can see, many institutional investors has been working with us already for the last 40 years since the corporation started. And they've been investing in each one of our projects. We can show the success finances that we've had. This one only shows the last 12 years, from the smallest one to the largest one. You can see which company invested in each one of these. And also, due to this amazing track record that Participant Capital and Royal Company has, we have access to something that is called a completion guarantee. That is a type of insurance, because we are in development. Development means that we buy land to develop. We don't buy something existing to operate it, or even what we develop, we don't keep it to operate it. Everything that we do is with the final goal to sell it at the end of the day. And because developing has a higher risk, to call it that way, because not everything is completely 100% sure that it's going to be done, we acquire this completion guarantee that act as a type of insurance that it will be covering the project for any variable that can happen to the project that will stop it from being finished. So what this means, because most of our projects, as in Florida, many times we receive the question that it says like, what will happen in any year that there is a strong hurricane season and your projects will be affected by it? Well, in that case, we have this completion guarantee that will come to give us the money, not just to finish the project, but to finish it without passing the total budget that we said that was going to cost the project. Or what happens, for example, if the institution that was going to give you the loan for that project goes bankrupt and can give you the money, here again, the completion guarantee will come and will cover that position. So with this completion guarantee, we can say for sure that on the worst case scenario, we will have a finished and completed product. And once the project is completed, it's just a matter of time to actually receive the profit and the returns that we were expecting from that project. How we finance our project, we show an example here. This is the Panama Miami World Center that I was mentioning before. We have a very conservative capital stack. because for projects that are for sale, we never go higher than 60% in loan. Here was 52%. And one very important point is that the deposit, this is the money that we receive for pre-selling the units that we sell, can be used to towards the construction cost. So we can pay labor, we can pay interest, we can pay for materials from this money, which is an exception in Florida, in the US, because Florida is one of the few states that can actually do this type of investments and use this money in the country. And the equity side is where the owners are. Here, Rising Tide was the largest one. Royal Palm Company also invests as an equity partner in each one of our projects. And it's in this section of equity where participant capital will be investing, getting the returns of the entire project. For example, in this Panama Miami World Center, the construction cost was $546 million. And the total value once we sold the units was about $670 million. So that difference from 540 to 670 is the difference and the return that the investors, that your investors, your clients will be receiving, because they're gonna be investing side by side with us and the other financial and institution partners that we have in the project. Also, as I mentioned, you're gonna be investing in the US, which is the largest company. And in cases and scenarios like we're living right now with the pandemic, it gives you the support and the backup of being investing with the largest economy in the world. For example, the economy, the entire GDP of the US is $21.4 trillion. The second largest is China, the third largest is Japan. And the US already gave a relief package to investors, to companies, to their citizens. It was, the relief package was for $3.2 trillion. When we see that India, the fifth largest economy in the world, the entire GDP is $2.9 trillion, you can see that the relief package that the US gave is larger than the entire GDP of India. And we already are expecting, there's already conversation, and now with the new president, it's gonna be even more easier to get a second relief package for an extra $2 trillion. So the entire relief package that the US is gonna be giving to their economy is gonna be $5.2 trillion, which is already larger than the third largest GDP in the world, that is Japan. So this type of support and this type of backup, you cannot find it anywhere else in the world. Only the US can give you the type of backup, the type of backup, and you're gonna be taking advantage of that, investing with participant capital, because we invest in the US. Also, as I mentioned, most of our portfolio right now is in Florida. Florida is the third largest state in the country. The first one is California, second Texas, third one is Florida. And when we look at development, one of the key points that we look at is demographic changes in the area where we're developing. And in that area, the state of Florida is by far the winner in the country, because we have an average of 1,000 people moving into the state every single day, looking a place to live, looking a place to work, looking a place to get entertained. And that is exactly what we are offering to this huge demand that we see coming into the state of Florida. And also, when we look at the portfolio of the investors, we've seen that the traditional portfolio theory had a diversification of stocks and bonds. That was everything that people had before when they invested. But now we see that there is a new modern theory that it says, look, you gotta invest more and more in alternative investment, being real estate the most attractive and most trusted alternative investor that there is. And it takes a larger portion of the portfolio that investors have. And this is not something that we say or that we just wanna make public. It's something that institutions like Harvard University, for example, from their own money, from endowments, they diversify it this way. As you can see, almost 25% of the money that Harvard invests is coming towards real estate. And if Harvard University, an institution that we consider to be smart, that we consider to have all the information needed to make this type of decision, is invest in this way, why not to maybe not copy it, 100%, but try to adapt it to each one of the clients in a similar way to allow investors to have this type of diversification that will be providing them with the returns and the stability that an investment will be looking at. And so participant capital, I show you so far who we are, how we work, why we do what we do, how we do it, who we work with. And now participant capital is this financial arm that will allow individual investors and institutions to invest in the development projects that Royal Palm Company has. And I say invest different than buying, because many times people has confused buying a property with an investment in real estate. And these are two separate transactions. First, when you buy it at market price, the price that we as developer want to give you, or the price that the current owner wants to sell it for. When you invest in participant capital, as I was mentioning, you invest at the cost basis. You're a partner in the development. You are investing at the same level that we are investing, getting the same returns that we as developer are getting. As I mentioned, for example, the Paramount Miami World Center, we built at $540 million and we sold for 670. That difference, that was an IRR close to the 25% annually. That's the same return that the fund will get in. So that's the same great advantage. The first great advantage of the participant capital is offering. A second great advantage is that investors will be investing side by side with some of the largest institutions that are in the world that are already investing with us, and they have to invest at least 10, 20, 40, $80 million in one of our projects to actually be part of the investment, the capital stack. However, the investor from participant capital can start with a small investment of $50,000. That's the minimum investment that we have, and they're gonna be investing side by side at the same level, getting the same returns as those large investments. And a third great opportunity and that investor will get investing with participant capital is that they're not gonna make only, and they're not gonna invest in only one project. They're gonna be investing in all the projects that we have, in the pool of projects. So they're gonna get the benefit of diversifying in different type of products, because we're gonna be investing in real estate, in residential for sale, residential for late, the highest class, high class, middle class, also hospitality, different classes as well, so that you have a diversification of products, so you're not gonna be putting all your eggs in one basket. And also a geographic diversification, because even when most of our portfolio right now, about 70% is in Florida, even within Florida, we're talking about different markets. For example, the southeast side of Florida, where Miami is, and the metro area of Miami, depends a lot in international investors. For example, in the Paramount that we have here in downtown, we had buyers from 59 different nationalities that bought at least one property in this building. That is where I am right now. But in the Paramount from Fort Lauderdale, that is only 40 minutes driving from here, 95% of the buyers were Americans. And if we move to the west coast of Florida, we also have a high American influence and a high European influence. So we are aiming and we are taking advantage of different markets that are investing with us, different group of people investing. So we're also stabilizing and giving a diversified portfolio to the investors that are going to be taking advantage of all this diversification. And how can people invest with us? As I mentioned, we have a Reg B. We show it on the international side to show that we are regulated and registered with the regulators in the US. That is FINRA. We're also doing the registration with the SEC right now. And we have different due diligence reports made on us by third parties. And all of this due diligence package have come very, very positive. I also mentioned we have different funds. We have our Luxembourg fund that is administered by Lemanic. Lemanic is a very large administrator. They have about $40 billion under management. They are administrating our fund. We have KPMG as the financial auditor of the fund. Everyone knows KPMG, one of the 5 largest accounting companies in the world. They are the ones who are auditing our financial statements. And we have Marshall Stevens, that is a US company that has more than 19 years of experience, 90 years of experience doing only appraisals of projects. These appraisals, they look at the project and they say, look, participant capital today, they have this piece of land that costs, I don't know, $100. And on the next visit, they come and they say, okay, participant capital now build the parking structure for the building. This is not valued on 100 anymore. Now it costs $105. So that valuation, they give it to the administrator, and the administrator is the one who is going to be calculating the net asset value every single month. We also have, as I mentioned, the Cayman Island Fund. Here we have a different administrator that is Trident Trust. Is the largest administrator fund outside of the US in the world. We have a different auditor that is EisnerAmper, one of the 10 largest auditing company in the US, and we have the same appraiser in the fund. You can buy it through any institution. We have different icings, and you can just buy the icing, and you will see everything in your client's private banking or account, investment account that they might have. We accept transactions from any platforms, Pershing, Charles Schwab, any bank. And again, at the end of the day, it's an icing, so you can buy the icing in any institution. And as I was mentioning, the conditions for the investment is a minimum investment of $50,000. This $50,000 will give the investor an annual return estimated between 14 and 16% in average. This 14-16% is divided in two parts. The first part is a 7% annual return. It's a cash distribution that they will receive, and it is paid quarterly. And the second part, the other 7 to 9%, is on valuation on the investment. For example, Kevin Ballard today, that we are on November 19th, invest $100,000 into participant capital. On November 19th of 2021, Kevin will have $7,000 in his bank account, and he will also have a 7 to 9% valuation of the investment. Let's say it was 7%. On 2021, he won't have invested $100,000. His investment will now be worth $107,000. And the 7% on 2021 will be calculated based on $107,000. So every year there will be a capitalization, because we will be paying the distribution on a higher amount every year because of valuation of the investment. We have a soft lockup period of 5 years. That's the minimum time that we expect the investors to be with us. They can be for longer time. Our fund is an open-ended fund. We don't have a closure. However, if the investor, for some reason, they have an emergency, they have the need, they want to redeem before the 5th year, they can do it, paying some early redemption fees, depending on which year they are. They pay that fee, and they can redeem the investment. Let's say that they've been with us for 3 years. In 3 years, because there is a capitalization, taking a 14% annual valuation, annual return, they're gonna have about 46, 48% in returns. In the 3rd year, they pay a 6% fee, and they take the other 40% returns, and they can take it out at any time. We also have an accumulation class. So those investors who don't want to receive the 7% return, everything will be accumulated, and at the end of the time, and at the end of the investment, it will be a higher return. We continue to show the same 14, 15, just in case, because we don't know exactly how long the process is gonna be, but the longer they keep the investment, the higher the return will be at the end of the day. And as I say, we have different projects, different type of projects. If you are more interested in having more information about each one of these projects, right now is not the time. I'm gonna just go through some of the slides of the projects that we have. We have a hotel that is actually a mixed-use development, that we have different type of investment and different type of returns from this project. Our CEO, Dan Cotti, he's constantly on the news, Fox News, CNN, CNBC. He's one of the developers that are considered like a visionary of what's going to happen in the future. You see the type of projects that we have. This is our Panama Miami World Center. This is our legacy hotel that we're going to be developing right across the street. It's going to be part of the Miami World Center. They're going to have the first glass edge of the city. We have other residential development. This is this is the most recognized residential community in the U.S. Miramar Lakes and Beach and Golf Club. We have the last piece of land available to develop in this project. This is how it's going to be looking at the end. We also have residential for middle class. This is for rent. We're not going to be selling the units. We developed the entire project and we stabilize it for a period of time and then we sell it. We have master's plan, as we mentioned. This one is in St. Petersburg, Florida. It's only 15 minutes away from Tampa, one of the 10 fastest growing metro areas in the entire US. We have this piece of land here that is 46 acres. And once we finish it in about 10 years, it will look something like this. We also have, we're gonna be developing the first mega resort in the US. There is no mega resort in the US like there is in Mexico, like in Cancun or Dominican Republic or Bahamas. We're gonna make the first one here in the US with different brands that we're gonna be working with. Right now, this is how the land looks like. We have already developed here a Hyatt Regency, and we're gonna be developing different hotels in the peninsula. This is how it's gonna look like once it is finished with our marina and town center. You can see many renderings that we have. The next brands that we're gonna be working with, the first one is, well, we're gonna have a marina as well that you can see here. The first one will be the SLS that is gonna have, sorry, having trouble choosing the slide for the SLS, how it's gonna look like at the end. Mandarin Oriental with different type of projects. At the end, it's gonna have the hotel and residence as well. People are gonna be able to buy independent residence like this one. They're gonna be at least $2 million each one of these. And the other one is Rosewood Hotels. The same thing, the same idea. Hotel with residential. They're gonna be selling up to $50 million one property inside the project. And again, we can go over the projects later. I'm gonna leave it like this and open it to questions, and we can share some insights later on a second follow-up call that you may have. Thank you again for staying for the presentation and the entire time.
Thank you, Nicholas. Okay, there's no question come through at the moment. But what I can say, Nicholas, is obviously a lot of the audience are LATAM based. And what I'd like to do is to be able to offer a direct phone call or presentation with yourself or Zoom conference where you can go through the details in Spanish and go through maybe a little bit more detail with anyone that has specific interests in the fund.
Perfect, definitely. We're open anytime you want it. We can schedule calls, a deeper webinar to give you more explanation. Trust me, I skip a lot of information because of the time, but the revenues that we've been receiving, for example, in 2014, it was 14.35% in 2019. And in 2020, so far, we have close to 6.4%. And we're not gonna reach this year the 14% that we aim to, but again, the 14% to 16% is in average in the 5 years that the person is going to be investing. So some years is going to be a little lower, other years are going to be higher, but at the end we aim to, that's the average what we are aiming for, and we've been getting it so far. So this year we should be reaching about 11, 12% in return for the investors.
Excellent. I think half of the audience that are on the webinar, I know, attended the conference in Panama either this year or last year. God knows if we're going to get through that conference next year and what's going to happen with the current travel scenario, but we do hope to be hosting Wealthics events in the region next year. It's unlikely that it will be as early as March, though. It may well be later in the year. So thank you very much for your time, Nicholas. I will arrange some direct calls for you. And again, for the audience, we will send on the presentation that you've had from Nicholas today. We will send that on to you all directly, and then I will provide Nicholas's contact details in that email, and you can follow up directly should you want a direct presentation in Spanish. So that just leaves me to say thank you very much, everybody. Thank you to our presenters.
Thank you, everyone.
And yeah, if you do have any questions whatsoever, please either contact me directly, Manuel directly, or info@wealthics.com. So thank you very much. Enjoy the rest of your day.
Thank you.
Thank you. Bye-bye, Kevin. Bye, Manuel.
Bye-bye.